Hello, good afternoon, everyone. Just want to do a quick sound check. Can you hear me loud and clear? Okay, perfect. All right, this is Rich Lepis. I'm going to be doing the intro for our guest today. Fausto's actually doing his Phase 2 class today. We have a great webinar. We're hosting is going to be Ross Mullins, the head trader for Forex Daily. He's been trading Forex for over 10 years. I mean, he definitely has an extensive resume. He's going to be doing a webinar today on how to string 50 trades together. You know, like I said, this is going to be the first time he's presenting with us, so you're definitely in for a treat. All right, so Ross, I'm going to pass it over to you.
All right, folks. Thank you, Rich, for that intro. Just want to make sure my mic has come through okay also. If you just give me a quick yes if you can hear me so I can know that everything is coming through just fine. All right, looks like everything's coming through fine, and we'll just get started. Before I go any further, I do want to take a moment to say thank you for taking your time out of your busy lives to join me here today. I'm excited and grateful for the opportunity to share with you today. Like Rich said, we're going to go through trading the Forex today. Today I want to talk a little bit about my own trading strategy and how I find my trade setups on a daily basis and decide when the best time to enter or exit the Forex market is. I believe that my strategy encompasses core concepts that any Forex trader must master to become a consistently profitable trader. But just a little bit more about me. I have been trading the Forex exclusively since 2002, focusing all of my attention to this market alone. And for the past 6 years, I've been providing daily market analysis for the 7 major currency pairs that include the US dollar through the Forex Traders Daily live trade room. You know, folks, right now is an exciting time in the Forex. Even with the kind of craziness that we've seen, especially today, going on around the world, people are making money and making amazing profits trading currencies. Just today in my live trade room, I had a trader that is just at the end of his 2-week trial period with me that in the past 2 weeks he says he has seen a 27% gain in his trading account. Now, I won't take credit for all of that 27%, but that just goes to show you that there are people that are making money trading in the Forex right now, regardless of the current market situation that we have going on. So that being said, that's amazing profits. And by the way, if you want to get in on that trade room trial, it's just $10, and I'll talk a little bit more about that at the end of the webinar. Again, all I want to do today is show you the basics of my trading strategy that I use on a daily basis to get in and out of the market, to go long, to go short, and get out of my trades. And in a few minutes, I want to go over a few things first, but in a few minutes I'll pull up the live charts and show you some examples that we've been trading in the past few days in the trade room. But first, let's take a look at this saying from Benjamin Franklin. He's been quoted as saying, "Tell me and I'll forget, show me and I may remember, and involve me and I will learn." You see, trading is an activity. It's not a spectator sport. You must kind of roll up your sleeves and get dirty, so to speak. And until you do that, you cannot really truly understand what it means to be a Forex trader. No matter what strategy you decide to employ in your trading, it will be a practical application of that strategy that will be the true test of your understanding. But let me be clear, trading and technical analysis take time to master. First, you have to develop a strategy either on your own or copy someone else's strategy. Then you have to master that strategy, ideally, before you put your own money at risk. So the question is, where do you start with all of that? Well, what I found out early on, mostly on my own by trial and error, is that there's an overwhelming amount of trading information out there. And it's a daunting task to sift through it all. You know, just take a look at this next slide and some of the technical indicators that are available out there. And this, of course, is just a few of the indicators out there. There are dozens to choose from. And you can see just by looking through them, there are multiple variations of many of these, like moving averages. You can take multiple variations of moving averages, and not to mention the different interpretations and uses of tools like trend lines and so forth. So how do you decide which one of these to use? Because you could spend hours or months or even years even just trying to sift through these. Now you might have a little bit of success, or most likely you'll have a lot of failure during your trial and error. Now I'm in no way by any means saying that these are bad. Any of these are bad, because used correctly in the right market conditions, each of these have some value. But just think, if you tried to apply only half of this list, the left half or the right half, to your charts, you could probably barely see what's going on in the market because of all the lines and bells and whistles all over your chart. So how do you whittle this list down and begin to develop a winning trading strategy? Now, I would say that there are probably two critical factors for making money consistently in the Forex. First, my suggestion is to keep it simple. You know, pick a few of those indicators out of the list. Could be 2, 3, 4, 5 of them, but pick ones that make sense to you and then master them. You see, it's only going to be better to master a few of those indicators than be a slave to just too many of them. I've done that, believe me. And when you choose the indicators that you're going to use, pick the ones that are well known. And there's a reason behind that. First off, because you'll find more training and information on how to use them than you would a lesser known indicator or something that not very many people use. And second, there's a reason they're common or widely used, and because used correctly, they work. So what I'm saying is, don't try to invent the wheel. And when you finally settle in on a few indicators, you know, master them, become their friend, get to know them inside and out. The better you understand how they work, the more useful they will be to you. And when you've settled on a few of those indicators and developed a strategy around them, I suggest being consistent, employing a strategy the same way all the time. You know, some people, probably a few folks in the webinar today, think that consistency means you're going to win every trade or even almost every trade, and that's not what consistency means. Even when you're a consistent trader, you can and will have losing trades. You know, you can be a consistently losing trader, so that's not what consistency means. Consistency means you must develop a strategy that works consistently over time and then use it consistently. You know, trading is not one trade. Trading is not 10 trades for that matter. Trading is something that you work at over dozens or hundreds of trades. And if you follow a familiar and similar strategy over time, that's going to be consistent trading. And so in keeping with that simplicity, I generally stick to the major currency pairs, like I said, that include the US dollar. You know, I look at them somewhat like indicators. There's a lot of them to choose from. There's dozens of currency pairs and cross pairs to choose from, and some of them are more volatile than others. Some of them have higher trading costs than others. Some of them will make you more money. Some of them will make you a little bit less money, but each of them has its own personality. It might even be that you just want to trade the currency of your country's homeland wherever you are, and that's fine, but I suggest picking ones that are best work out for you. Get to know their personality of the pair. But however, whichever pair you choose to trade, the trading strategy that you're going to employ and apply to each of your trading pairs that you're going to trade will likely remain the same. And then, of course, you're going to apply the indicators of choice that we talked about a little bit a few moments ago. And for simplicity's sake, and I think by the end of the webinar you'll understand where I'm coming from, but for simplicity's sake and the sake of time today, we're here together only for a short time, I'm going to discuss what some people might think a little too basic, but I think you'll understand where I'm coming from by the end. I'm going to be discussing support and resistance. Now again, I know you're probably saying everybody knows about support and resistance, but I just want you to bear with me and understand the way I've been using it over the past several years. You know, these are the classic bump in the road, so to speak, kind of a speed bump in the road. However, there's many different indicators that you can use out of that list to identify levels of support and resistance. First, of course, you could simply draw a horizontal line to represent historical levels of support and resistance. But really, that's just the beginning and the tip of the iceberg. Additionally, you could use something like Fibonacci to mathematically identify naturally recurring levels of support and resistance using the Fibonacci sequence. And if you're not sure what that means, you're going to have to find out on your own, because we don't have near enough time to cover all the ins and outs of Fibonacci. That's an entire new webinar on its own. But anyways, you could use pivot points, pivot levels that calculate potential support and resistance using historical trading data from the previous day, or you could use any multitude of variations of moving averages to project potential support and resistance based on price action. Whichever you decide to use, they all are primarily doing the same thing. They're identifying barriers in the market. Think about moving averages, trend lines, pivot points, Fibonacci. They're identifying barriers in the market. They're doing the same thing. And these are fairly easy to identify once you know what to look for, which in turn goes back to what I was talking about before. It makes them a widely used common indicator. Whether you're a very beginning trader or a very advanced trader, you're looking for support and resistance. And what I like about support and resistance is that you can look back in time, days, weeks, months, or even years sometimes, and find the market has recognized a specific level, a price level, over and over again. So as with any barrier in the market like support and resistance, there's two main potential scenarios that you're going to run into. That's a bounce or a break. And these are going to be the key decision points that you'll need to recognize when you first decide to take a trade or not. First off is the potential bounce. This is where the market stops or stalls for a period of time, maybe short, maybe long, and reverses and goes back in the opposite direction. Now that direction could be with or against the trend, but we expect if it's going to be a barrier, it will bounce off and go back in the other direction. The next scenario, of course, is a potential for a break or a breakout. And this is when the market passes through one of those bumps or those barriers in the road and continues to move in the direction that it was previously moving in. And we could call that direction the trend. Now, I think with all that behind us, I've spent 10, 12 minutes now talking a lot about what you could look for in the market. I think the best way for me to explain all of this, and this is what I do every day in my live trade, is I'm going to go to the real charts, the live charts, and I'm just going to do all of this. I'm going to explain it all in real time. So give me just a second to switch over to my live charts here. All right, you should be seeing my chart now. I switched away from the PowerPoint and seeing my chart now. And I'm going to go through various currency pairs, and all of them will include the US dollar and different time frames that you may not be used to trading. If you're a short-term trader or an intraday trader, you might typically follow smaller time compressions, maybe a 5 or a 15 or a 30-minute chart. But what I'll say is, even you short-term traders, you might even consider yourself a scalp trader, even the short-term or scalp traders are going to benefit from looking at much larger compressions like we're looking at right here, the weekly chart for the pound dollar. And I'll explain why, and hopefully you'll understand what I mean by all of that towards the end of the session. So let's do one thing first. I listed out a bunch of indicators, and I don't want to use too many on the chart at one time. But the first thing I'm going to do is just throw in a quick Fibonacci retracement measurement of the previous long-term uptrend. Again, this is the weekly chart on the pound dollar. And throughout time, over the past several months, just throwing Fibonacci of this previous uptrend, you could see times when the market was coming down and hesitated right here in this time frame. What is that? We're looking back here in September of 2014. Look at the hesitation right around the 382 Fibonacci retracement level, or you could call it a 38% retracement level. Then it came down into the 50%, not really a Fibonacci ratio per se, but it's a commonly understood retracement level. And you can see the hesitation. Again, this is the weekly chart, so there was 1, 2, 3, 4, 5 weeks that hesitated right around the 50%. Then it came down, 618. Look what happened. Instead of sitting on top of the 618, it found resistance underneath it. That's very interesting. And now Recently, we've seen the market challenging down here towards the 0.886 fib. Again, if you don't know much about Fibonacci, I would suggest you take some time outside of this webinar to learn a little bit more about it, because I think it's a very important tool for Forex traders. All right, that's the first thing that we're going to do to identify potential barriers in the market. Remember your two scenarios. One of them is a bounce and one of them is a break. So you can see how the market has reacted, each one of those Fibonacci barriers on the way down. So now next thing I want to do is I simply want to bring in a couple of horizontal lines, just a couple of horizontal lines to identify, and I'm going to change the color of that real quick. I don't want it to be red. Give me just a second here. I'll just put it right there and change the color to black. But as we do that, and I'll just leave it right there, as we put a line at the Fibonacci level, we can look back in time, and this is what I mentioned about support and resistance a few moments ago, is that you can look back in time, days, weeks, months, or even years, and see historical price levels of support and resistance duplicated over and over in time. Just take a look at that one singular line, 1.5720 for the pound dollar. You follow it back. Not only is it the 618 Fibonacci retracement level of this previous uptrend, you now follow it back. You see several weeks finding resistance. You follow it back to the left of the chart. What happened? You found support. So again, I'm hoping you're starting to understand what I mean by historical price levels that can help you identify future barriers. It's not a mystery. There's no magic to it. It is a fact. This is fact back here on the left-hand side back in 2013. There's no making that up. That's fact. So that resistance back here has now also offered resistance. If in time, later on down the road, 2, 3, 4 months from now, we see the return to 1.5720, there is a high probability now that will find resistance once again into that area. Let's identify a few more of those horizontal levels. I'm just going to bring another line somewhere down right into here. And I'm not only putting it there because of the 886 fib and the past week and a half that we've seen support there just recently, but I'm also going back here to the left-hand side of the chart and identifying historical support. So we can identify these levels as historically accurate and factual areas of support and resistance. What causes, let me ask you a rhetorical question, because I don't expect all the people in the webinar today to answer this question, but what causes support and resistance? Now, I'm not trying to define support and resistance. I'm not saying it's 2 candles to the left of a high and 2 candles to the right, but what causes support and resistance? What causes that to happen? And you might say a lot of different things, but what I will define it as, and this is the way I'm going to simply define a support and resistance, is that's where the big money are making their trading decisions. What do I mean by that? The big money is making their trading decision right there. That's where the central banks, that's where the hedge funds, that's where the pools of brokers are pooling their money together, and there's millions of lots or millions of dollars being traded at a particular level to make the market either stop, stall, or even reverse. That's what causes support and resistance. So a support is created when the market's going down, it reaches a particular level, the big money decides that's an exit point, and then becomes potential entry point. That's what happened back here on the left. The big money, this was 3 weeks going straight down, big money decided to exit their sells, enter their buys, and it turned around and went up. Where did it go? It went right up here into the 5720 level. What happened then? The big money, not us, not me, not individual investors, but the big money decided, hey, it's time to exit the buys and get in the sells. That's the simplest definition I can give you about what causes a support and resistance. The big money makes a change in the direction that they're trading a currency pair. It doesn't have to be here on the weekly. It could be on the daily. It could be on the 4-hour, but we can recognize where the big money is making their trading decisions by looking back in time. And people, traders, and human beings tend to do what's comfortable and common and recognizable. They do very similar things all the time. That's why Fibonacci works. That's why support and resistance works as a clear strategy. All right, let's identify a couple of more of those levels just for clarity. Let's put another one right about right here. Is that a clear area of historical and factual decision making? I think so, because not only do you see it right here where the market was, remember, and this is the weekly chart, there were several weeks here where sellers exited and buyers entered. Sellers exited, creating support, buyers entered, turned it around and went right back up in the other direction. You go back over here to the left-hand side of the chart. This is where buyers exited and sellers entered. So we can make our trading decisions. Me, as a smaller investor, I'm not a central bank or I'm not a hedge fund. Me as an individual smaller investor, I want to make my trading decisions to enter, exit the market at the same similar levels as the big money is doing it. So not only Fibonacci, but now we can historically see that going back in time. And let's put another one here. Let's go right about right in this area right here. And I'm going to look back in time. Not only over the past week and a half we've seen resistance there going back into the 786 fib. You can go back in time. You can see 1, 2, 3 weeks or so finding resistance and support there. So all we have done is look back in time, found historical support and resistance, and these are the areas that we want to make our trading decisions. As smaller investors, we're not controlling the market. We can't control the market, but we want to trade what the big money is trading. That's all I'm trying to get across. Let's take all of that information from the weekly chart down to the daily. Now we're going to start to get a little bit more detail to the market. We're going to get a little bit more detail to or precision to our potential trading opportunities. So let's go ahead and take another horizontal line. This is what I like to do in the trade room on a daily basis, because typically there's not a singular price level where the market makes a trading decision. It's more of a zone that the market makes a trading decision. When I say the market makes a trading decision, I'm talking about the big money again. There's a zone where the market has made a trading decision. I'm just going to highlight it here real quick between these two black lines, and I'll just leave it that yellow color. So now you can see between 1.5720 and 1.5770, that was a trading decision area where the market made a trading decision to exit the buys, exit buys, and enter sells. So during that time frame, what would have been prudent for individual traders to be doing? It would be prudent for individual traders to be doing the same thing, exiting buys and entering sells. Not only is it into resistance, but it's at that 618 fib of the previous trend range, and it's in the direction of the trend. Again, I mentioned this a little bit ago. You could use tools like trend lines to help you identify areas of resistance. That's another tool. It's not too many tools on the chart, but it's just another tool that you can use to help you identify the direction of the currency pair, number one, which is a trend, but also resistance within that trend. So you see the market coming down, you know it's in a downtrend. That's not too hard to see it's in a downtrend. So in the downtrend, what's your best opportunity? To sell into resistance, because that's what the big money is doing. You want to find low risk, high reward opportunities. Everybody's heard that saying, right? You want low risk and high reward. Well, I would say that the best way to find low risk and high reward is buy low and sell high. That's the best way to do it. Buy low, sell high. If you want low risk in a downtrend, where do you find lower risk scenarios in a downtrend? At a resistance level, and that's where you're going to identify those lower risk opportunities. Your risk, if you were to sell it down here at the bottom, let's put another horizontal line right about right here. And let's put another highlighted area there, another shaded area, and I'll make that one a different color so we can identify it a little bit differently. Let's make that one the green color. Okay, so now this green zone is now support within a downtrend. Is it better to sell at the support in the green shaded area, or is it better to sell at the yellow shaded area? Buy low, sell high, in a downtrend, better to sell at the yellow shaded area. It's as simple as making your trading decisions where the big money is making its trading decisions. So throughout the past couple of weeks in the trade room, we've been focused on selling the trend, selling resistance. The other opportunity, remember the two scenarios of support and resistance? Remember, it's bounce or a break, right? So all you have to do is look at these two areas, the yellow shaded area, the green shaded area. You know that the market in the direction of the downtrend bounced off of the yellow shaded area and broke through the green shaded area. I'm going to zoom in a little bit further here so we can see this a little bit better. Now here's the way I define a breakout, okay? This is Ross Mullins' personal way to define a breakout. And I do it like this because I want to save myself from a false breakout. I don't want to fall prey to a false breakout. Okay, so the way I'm going to do that is I'm looking for an open and a close, not just a close, not just an open. I'm looking for a singular candle body, open and close, under a support to consider that a breakout. And here's the analogy that I'm going to use. Let's go back to a bump in the road. All right, you have a speed bump in the road. You're approaching the speed bump in your car. What do? You slow down as you approach the speed bump. Your front tires go over the speed bump. Do you accelerate again? Do you hit the gas and move faster again? No. Usually you wait for all four tires, all four wheels to get on the other side of the speed bump before you expect to accelerate again. Think of that just like this barrier, okay? This green shaded area was a speed bump in the market. It was coming down, down, down. Sellers exited, buyers entered. Over a several day period of time, it bounced around in here where the buyers entered, sellers exited. It became a speed bump in the market. It attempted to break out here. It attempted to break out here. It finally opened and closed full, all four wheels, all four tires under the speed bump, used it same area as resistance, and then accelerated again. That's how we're going to identify a breakout of support. It would work the same way with resistance. If we were to look for reversal here, and if it would have opened and closed above the yellow shaded area, we would have expected it to go up instead of down, but it didn't. It broke out underneath in the direction of the trend and went down. So all we can do now is look for new opportunities. Over the past several days, we have looked for opportunities in the trade room for selling on the pound dollar, and I'm just going to take this back in time a little bit first. Let's take this line, let's make it red again. Take a look at that red line right around 52.93. Let's go back in time, the last time the market was here. Remember, I want to look for historical price action in these areas. So we look back here, we're all the way back into what is this? This is 2013, and I'm going to just get some more precision to my shaded area here. I'm going to bring this down just a little bit. You can see the bodies closing underneath that red line here. I'm actually going to bring the black line down just a little bit also so we can see historically there's wicks and bodies stopping and stalling, not opening and closing underneath a particular level or above a particular level. And so we can see that between the black and the red line right back here. Look at the resistance here. Look at the breakout here. Look at the resistance here. Look at the breakout here. We could see that back in time. So now we take that back over here to the right-hand side of the chart, and we can throw in another one of those quick highlighted areas like we did there with the green and yellow. I'm just going to draw it out here, and let's make it a different color. Let's make it this blue color. So we'll bring this down here. Over the past few days, we've been watching for opportunities to sell the pound dollar on the next rally to resistance. So we've now just identified this blue shaded area now as our next area of resistance. Remember, we're using multiple tools to identify this too. We're not just using horizontal lines and Fibonacci. We know the 786 of the previous range is there, but now we can look for new reasons. I'm also going to take Fibonacci of the downtrend. Let's take Fibonacci from this last high where the red trend line connects at the yellow shaded area just down to this low. And we can now find some overlap of Fibonacci at the top blue shaded area, and we can see that coming into that area right now. We can take Fibonacci of a little bit shorter range. We can take it of just this range here. And now we can see the 382 of just this little range sitting just underneath the blue zone. So we now know there's Fibonacci resistance at that blue shaded area also. Let's take all that information down to the 4-hour chart. And now we can see that over the past several days, the 382 fib has been our area to watch. And we can also go back here. So now we're getting some more precision, right, to our trading. We can now bring this down here. Why am I bringing that line to there? Because of the historical resistance we see right here. So you bring that line down like this, and in the trade room this week, we have taken sells on the pound dollar into this blue shaded area. Don't ignore the red and the green, and the yellow arrows. Those are a different indicator that we're not going to go over today, but the black arrow, that is the area that we look to sell. The 382 fib was there of this last little leg of the downtrend. You can see that right there. You can see the blue shaded area, the historical resistance in the direction of the trend. That was our selling opportunity this week into the blue shaded area. And now you can see we've seen the market drop off of there, now about 118 pips. What was the risk? And I talked a little bit about this a few minutes ago, risk versus reward. Well, at this stage of the game, and I'm actually going to bring that top down just a little bit to this resistance high over here on the left-hand side, the risk, we knew that if it broke back above, let me take the red and the green arrows off. Let me just take those off for a minute because I don't want you to get confused with what we're looking at here. What was the risk in this scenario? Taking a sell at 1.5260, 65, what was the risk? The risk was that it broke above and went back up. How do we know that? We've already identified that as a resistance barrier. Look back here on the left. We could see no open and close above that blue shaded area. If it would have opened and closed above it, we would have expected it to go higher. So our stop loss can go just above the blue shaded area. And by the way, that's not the only area that we've traded over the past week and a half. We also looked down here at the very bottom of the chart. Let's add in another highlighted area down here at the bottom of the chart. I'm going to make this a different color. Let's make this one the pink color here. We also have been looking at buys down here in the pink zone as a barrier of support. So we've also taken buys in the pink zone and sells in the blue zone. Those have been two great opportunities to trade the GBP USD over the past week and a half, and you can go back and listen to some of my free daily videos that I post out there on forextradersdaily.com. There's every day there's a running list of one currency pair that I go over on a daily basis. Speaking of that, let's move on over here to the USD CAD. This was actually the currency pair that I covered earlier this morning, the US CAD, and you can go over there, forextradersdaily.com, and listen to the video. I actually bought this currency pair, and you can see the buy on this platform. This is a demo platform, but it's duplicating the buy that I took on the US CAD earlier today. What's the trend? I don't think I have to tell you what the trend is. The trend's been up, and it has been up for quite a long time. If you're going to trade the direction of the trend, what's the best thing to do if you want low risk and high potential reward? You want to trade in the direction of the trend, buy low, sell high. Remember that, buy low, sell high. You want to buy into a support level. So as the market came down, so let's do what we did over there on the pound dollar. We're here on the daily chart first. Let's do what we did over there on the GBP USD. Let's just take a couple of horizontal lines, and I'm just going to draw a few in here. We know that that was historical resistance, right? Take a look right here. We can see that resistance right there. What does that resistance become later? Support. It's kind of easy to see because of the trade lines that are sitting here, but there was also a little area right about right here, and I'm actually going to surround these candles right here with two black lines, and we'll throw in our little bit of a highlight here so we can know that this is an area of support. We knew it before today. Before today, we knew that that would be support. Why? Because there was congestion and resistance right there. We knew if the market took a dive into there, that would become a buy in the direction of the trend. The other thing we want to know is there historical information that backs that up? And this is going to take us some time, But we can take this pink shaded area, let's just drag it back in time to the last time the market was here. And is there historical, accurate information in that same area? And let's just take this line off for the time being and just leave those lines there. Is there historical, accurate information that tells us that this is a price decision zone where the big money is making a trading decision? Look right there where the arrow is. We're looking all the way back in 2008 where the sellers were in the market. They were driving it down. Boom. The sellers exited. The buyers entered. What happened? Went straight back up. So we can also, the next time we come back down on top of there, make somewhat of an accurate expectation that that's what's going to happen again. Let's bring it back to our current time. All right, here we are. There's the same two lines, the same pink shaded area. Let's zoom it in quite a bit here. Well, let's just go down to the daily. There's the same area right there. What happened? People did the same thing. Traders did the same thing they did the last time they sat down on top of that price zone. So we can see that with some accuracy. Let's take it on down to the 4-hour chart. Is there some reasonable expectation of Fibonacci or another tool that we can identify support with? Let's just take Fibonacci from this low right here, major low, the last low after this little area of congestion right here. Let's take there. From there to the highest high. Well, guess what? The 382 Fibonacci retracement level of just that leg right there sits at 1843, just at the top of that pink shaded area. We can take multiple incarnations of Fibonacci. Remember, you're going to be somewhat of a trading artist, okay? What does that mean? The market is up for interpretation by you. That's really what I mean by that. As a trader, you are interpreting the market on a daily basis. You're using tools like support and resistance, Fibonacci, trend lines to paint a picture of what you expect. You're also the trading jury. You're the judge and the jury, and you're looking for evidence that points to a particular outcome. If you can't find any evidence that points to an outcome, you remove yourself from the trial, okay? You don't trade it. But what you're doing is looking for evidence that points to an outcome. So the more evidence, the more likely that outcome becomes. So you can see the congestion and support here. You can see the resistance here. You can see Fibonacci into that area. Let's zoom it in a little bit here on the 4-hour chart. Here's a little bit of an artistic interpretation of Fibonacci, okay? Artistic interpretation of Fibonacci. Let's go from here to the high. Is that wrong? I don't think so. It depends on your vantage point of the market. What is your vantage point of the market? It's your zoom factor. It's the time frame that you're looking at. We're looking at the 4-hour, but you could be looking at the 1-hour or the 30-minute or the daily. That's your vantage point. Are you looking at a 30,000 view of the market, 30,000 foot view, or are you looking at a 10,000 foot view of the market? Everybody has a little bit of a different vantage point to the market, and then you're looking at it with some subjectivity. So is the second or the first Fibonacci right or wrong? No. I think both of them have some validity to them. It just means you want them to begin to overlap and point to a particular outcome when they converge with other indicators. And we already know that there's historical resistance, support, and now Fibonacci's overlapping in here. We can also take one more. Let's take another fib from here to here. So all of that evidence is pointing historical support and resistance. We've highlighted with pink the two black lines, Fibonacci. All of that is evidence that here into the pink shaded area, before it even got there, was going to be support. And we could take a trade there. You can see the trade's already there, and it's locked in with profit. Everything's working out great on the US CAD. One of the other opportunities that we've taken yesterday and today, but yesterday in particular, was this area up here when you're trading inside of a range. This is a particularly interesting area here. We're at the very, very top of the trend. Remember, buy low, sell high? Well, when you're at the very top of the trend, you want to use a little bit of discretion, but this provided an opportunity over the past 2 or 3 days to actually take some short intraday buys into the 1.1945 level. Several traders in the trade room taking buys 1945 at the bottom of this area, and you could even highlight this in a little bit different way. You could take this and just say this is your zone of congestion right here, your decision zone. We can know with some certainty, I'm going to change it to the blue color, we can know with some certainty that the big money, the big players, for a period of time here were exiting buys at the top of the blue zone and entering sells. Why? Because it created an area of resistance around 1.198590. We can know with some certainty that sellers were exiting and buyers were entering, not you and me. I'm talking about the big money. Buyers are entering at 1.1945. There's no mystery to that, folks. There was no mystery to that. We can see that right here. So that provides intraday opportunities with low risk and high reward in the direction of the trend. Once it pushed underneath there, the next opportunity was the pink shaded area down here, and that's where we took our next opportunity. And you can go, again, back to forextradersdaily.com. You can listen to my video from very early this morning before it actually even took off here, and you'll be able to see that there. So now that it's hit the blue zone, what do we expect? Is this another speed bump, another barrier in the market? It is. This is our next barrier. Now, I don't think that this is a very good opportunity to buy this currency pair. I can see the past several hours have been going straight up. But remember, buy low, sell high. If you're going to buy a currency pair, do you want to buy it at the very top of the trend, at the very highest peak high for the day? I don't think so. I think you want to wait for it to go down. Remember, there's two scenarios with support and resistance. If this blue shaded area, big brick wall in front of the market, is a resistance, if that's a resistance, what do you do with it? You wait for it to either bounce off of it or break through it in the direction of the trend. So the next thing we're looking for would be a breakout above the blue shaded area and a continuation of the trend. And we have some targets picked out much higher for the US CAD that we talked about in the trade room. So that's the next thing we're looking for, would be a clear single candle body, open and close, preferably on the daily chart, above the 1990 level, 1985, above the blue shaded area. Then we're going to look for targets much higher for this in the direction of the longer term trend. I've spent a lot of time on this pair. Let's move on to another one. Let's go over here to the NZD USD. Not too hard to see some of the barriers that we've seen here for this currency pair over the past several weeks. You know what? Let's take it all the way out here to the daily chart. Zoom it in one factor, because I think this is going to be extremely important for you, extremely important for you to understand here on the New Zealand dollar, NZD, USD. Take a look at that level right there, 0.7700. For the past couple of months, I've reminded everybody that you do not want to sell it on top of 7,700. Why do we think that? We're going all the way back here to 2013. Did we ever see an open and close underneath 7,700 here on the weekly chart? No. Did it break the speed bump? No, it didn't. Go back over here to the right. Have we seen an open and close underneath 7,700 for 2 months now, 3 months now? No, 4 months now. We haven't. So every time it approaches 7,700, you stop selling. How do we know to do that? That's what the big money's doing. How do I know what the big money's doing? All I have to do is look where the sellers exited and the buyers entered. That's all I have to do. At some point in time, yes, it could break down underneath there and we look for it to go lower. But until it does that, there is no way, no how that I'm selling when it gets close to 7,700. So then when do I sell it? If the trend's down, has been down, if the trend's down, when do you sell it? Buy low, sell high. You sell into resistance. That's about as easy as I can make it for you. Where's your resistance? We already know there's a little bit of a downward facing trend line. You could almost call that a descending triangle here developing between the red trend line and the black horizontal line. If that's the case, if it's going to be a descending triangle pattern, where's the best place to sell it? There's two places to sell a descending triangle pattern. One is the top of the triangle, two is the breakout below it. That's the best thing I could tell you about the New Zealand dollar. Someday, we'll look for one of two things. It will either break out above here and change the pattern and start going back up, or it'll break down and go back underneath 7,700, which it has not done, by the way, since prior to 2013. 14. You can even take it down. You don't have to look here at the weekly chart. Take it down to the daily chart. You know, I told you at the beginning of the session that even an intraday trader, a scalp trader, should pay attention to the larger compressions, and I truly believe that, because down at the bottom, if you forgot about 7,700 as a scalp or intraday trader and started trying to sell it as it was falsely breaking underneath there, and let's put another line here, and let's put a shaded area or highlight into that area, we know that without a doubt, this is our barrier. This is our speed bump in the market. And until we see an open and close underneath there, I don't believe this trend is going to continue to go down. In fact, the opportunities are selling rallies into resistance, and that has happened so far again today. We're looking at this area right here, right around the 78, 56 or 46 level, 50 level. You can see, has there been, since back here, an open and close above that level? And there has not been. So right now, your barrier on top of the market is right about right here. And we've talked about this multiple times in the trade room. This is our barrier of resistance. Let me change the color of that so we don't, and the only reason I use different colors is just for communication purposes, folks. So there is your resistance. This becomes a selling opportunity, a breakout above there. We look for it to go higher. So far, we've had 2 opportunities over the past 3 days to trade the New Zealand dollar. One of them, which was historical fact of support, buying down close to the 7,700 level. The second opportunity that folks have had in the trade room was selling the green shaded area. It so far has been a very limited today selling opportunity, but previous opportunities have been very profitable. And until it breaks that green shaded area and red trend line, I expect that we're going to continue to look for resistance there. Take it on down one more time to the 4-hour chart. You can see the green zone holding as resistance, no open and close above it, blue zone holding as support. It did open and close, false breakout here on the 4-hour chart, but you take it back to the daily, no open and close. Let me repeat that. Daily chart, blue shaded area, 7,700, 7,680. No singular candle body has opened and closed underneath there at all on the daily chart. You go down to the 4-hour chart, you have seen some opens and closes under there. They were false breakouts. So that should tell you that the daily chart's going to add a little bit more weight to your confidence in the breakout. So you can see all of that opportunity there. Sells into the green zone, buys into the blue zone. That will remain true until a daily open and close above or below that green shaded area. In between there, I really am not interested in trading the New Zealand dollar in between the green and the blue shaded area. Let's move on. Let's go on over to the euro dollar, and this one's interesting. I know a lot of people have been watching the franc and the euro over the past couple of days. If you've been in the trade room, you know that I've been hammering this home all for the past several weeks. Don't forget about the trend. Trade the trend. Sell the trend. That's been the main focus. Selling resistance. That's been the main focus. You take one singular line and you put it right here. Is there evidence of historical support in this area? You know it, right here, all the way back here into 2005. You can see evidence of support there. So you know there's likely to see some intraday support somewhere right around 1,600. You can see a little bit of a push right there. So you can take another line and you can put it right about right here, and you can say that that is your barrier right now. If it breaks through there, you look for it to go lower. If it doesn't, what happens then? It potentially goes all the way back up into this area, into this barrier that you see right here. So those are your 2 areas to do it. So remember, go back to your trading motto, buy low, sell high. If you're going to sell the trend, is this a very good place to sell the downtrend? I don't think so. I don't think this is a great place to sell it at all. I'd want it to go back up, maybe even as high as 2,000, 2,100. Again, this is the monthly chart. The areas are wider. We can find some more detail to that, but clearly it would be better to sell it on a rally higher or the break of support, which it has done over the past few days. Take it on down to the weekly chart. You can see this barrier of resistance or support right here, that would offer some resistance on any challenge back up into the mid to upper 1.2100s. We could see the support today in between 1560 and 1630. That's where our intraday support is. Is there evidence of that back in time? Again, you scroll it back here to the left-hand side, take a look at what happened the last time the market was right around this area. We can look at other areas here also. This one right here is very interesting, right around the 1.1900 level. You can see that back in time. We're not even looking at the current time right now. We're looking back here on the left-hand side of the chart, and I could probably bring this up just a little bit. We'll add a secondary line somewhere in here like this. So now we can know that that is also going to be an area of resistance. Now we can take all that over to the current market. If we're going to sell the euro dollar and you think buy low, sell high, what's the better opportunity, I believe, to sell this currency pair? You can come all the way from the left-hand side of the chart and drag it over right back up there in towards the 1900 level. Becomes a much better sell into that area. There's historical evidence of that back in time. I don't know if I would even consider a buy right now with all the turmoil we've seen out of the franc and euro over the past 24 hours, but I'm just going to change the color of this real quick and drag it down there. But it just tells me that I don't want to sell it right now. This is not the opportunity to sell it. We want to sell on a rally into resistance. Let's take Fibonacci from this high down to the current low. That even tells us that there's a potential resistance all the way back up here. And let me change the color of that. Let's make it the blue color here just so we can differentiate between the three different areas. So now we have an idea of where our support and where our resistance is. If you're going to sell, you sell resistance. That's all I'm trying to get across to you today. Daily chart. You can hone that in, make a little bit more detail to your trading. You could even, remember, you're a trading artist. You're interpreting this from your vantage point. Take Fibonacci of this range right here, and now you can see some overlap of Fib right here into the green shaded area. That is once again becoming a clear area for resistance historically and currently. Let's take it on down to the 4-hour chart, and you can see the barrier of support. Historically, the yellow shaded area, and today. You can hone this in, give it a little bit more detail. You can squeeze in the shaded areas to get a little bit more detail. I'm going to try and get that green shaded area over a little bit. Let me just bring it over here like this. The yellow zone, we'll bring that over here like this. The blue zone like this. We can see that there is historically accurate, and zoom it back in here, historically accurate support and resistance. We can take even now on the 4-hour chart and get a little bit more detail, put some detail in here and add in another area that you know will be resistance right here. And let's change the color of that one so it is clear for us. Let's make it the pink color. That will be resistance. So if you're going to sell this currency pair, where's now shaping up to be the best place to sell the euro dollar? Here, not down here in the yellow shaded area. In fact, we're looking at potential support and reversal opportunities here from the yellow zone. Nothing there yet, but definitely something to think about. The trend is down. We could throw a trend line in here. That matches up with the pink shaded area. So if you're going to sell the trend, what's matching up now to be the best opportunity to sell the trend? That would be the pink shaded area and not the yellow shaded area. So I think hopefully you're starting to see where I'm coming from with all of this. I'm running kind of short on time. Just to answer one quick question, the place I ordered or I put those videos out there is forextradersdaily.com. Let me bring up my PowerPoint presentation real quick. I got a couple of other things to show you here. All right, I think it's popped up now. All right, that's the slide we left off on. We've looked at some live examples. You know, the trick to using in the indicator, like what I've been showing you today, is use them correctly, of course, and consistently. Trading is about probability. The more indicators that you use that point in a particular direction or to a particular outcome, the higher probability that outcome will have to occur. You know, at the beginning of the presentation, I suggested that you pick out a few indicators to master. That's because when they come together to point to a singular outcome, your confidence is increased in that outcome. You know, if you have two indicators pointing up and two pointing down, it's a 50-50 chance, and it's not very good. But if you have 3 or 4 that are pointing in one direction, pointing at resistance or support, that's when probability will be increased. You know, you can think of it as indicators like bricks in a wall or a brick in a barrier. 1 brick doesn't make a very good wall. 2 bricks, a little bit better. 3 bricks, a little bit better. And 4 bricks, a little bit better. I think you get the idea. The more indicators, the more evidence you see pointing to a particular outcome, the more confidence you can have in that outcome. Now, picking out support and resistance like I've been doing today, those levels, and even trend lines for that matter, is often more art than science. You know, finding those exact levels rarely happens, but more often it's about a level of consistent congestion rather than a single candle or wick. Hopefully I've demonstrated that to you today. And you'll probably hear different traders. You know, I'm not the only trader out there, of course, but you'll probably hear different instructors or traders that use different methods of identifying levels and drawing lines, and that's okay. But I would say find a method that works for you. Whichever indicators that you settle on using, find the method that best represents what that indicator is trying to do, whether it's support, resistance, or volume, or momentum, or trend, and then be consistent with it. If you're consistently changing the way you use an indicator, if you draw a trend line one way today and then draw a trend line a different way tomorrow, it really kind of diminishes the value of that indicator. So use the indicators in the same way all the time. Now, once I've identified the main trend on a daily basis or directional focus and any barriers or support resistance that I find significant for the day, it then, and just like everything else, it then becomes a waiting game. You know, trading is waiting. Most of the time, you're waiting for a level to be reached before entering or exiting a trade, or waiting for the right signal or the opportunity to develop. However, I'll go back to it and say trading is an activity. It's not a spectator sport. You must actively participate in the market. Or at the moment when the price and the indicators converge at the right opportunity and it arises, you might miss it. So you have to be a participant in the market. And you know, this is hard for some people to do. Sometimes if you don't know what to look for, or you just don't have the time to devote to studying the market, and you know, you have the big old job, the job, you know, it's difficult to do. So how do I know this? How do I know it's difficult? Because I've been there. You know, years ago I would sit in front of my computer and I'd look at the charts and ask myself, you know, what do I do now? So here we are. We're right back where we began, back to the basics. Tell me and I forget. Show me and I may remember, and involve me, and it's likely that I'll learn. You know, learning to be a successful trader is a journey, but certainly worth the time and effort, in my opinion, that you will put to get there. You know, it's a very exciting market these days. Lots of folks making money, and I think it's a great market to be involved with. Okay, I've said a lot here, and I know that there's some questions popping up there, and I want to answer a few of them before we close out for the day. But before I go into the questions with you, Forex Traders Daily has put together an offer for you to take advantage of my trade room and take it for a test run if you wanted to do that. Let's see, by using this special link that I'm going to post into the chat window. Just give me a second here to pop it into the chat window. And it should be coming out there right now. By using that special link that I posted into the chat window today, you can register for a 14-day trial of my live daily trade room. Basically, I do all of this stuff every day in the trade room. With the trial, you're going to get an all-access pass to the live trade room. The trade room, by the way, is open Monday through Friday, and it's a limited time. It's 10 a.m. Eastern time. That's the same as New York, to 11:30 a.m. Eastern time. In the room, I go through all of the 7 major currency pairs with the US dollar, plus any other crosses or exotics that attendees have questions about. I'll go through how the support and resistance levels will affect the market and the trading for the day. Basically, you get to look over my shoulder as I show you how I will arrive at my trading decisions and where I'm going to enter the market and how I'm going to evaluate risk and reward. You can also, during the live trade room, have daily opportunity to ask questions and talk about specific trades that you are in. And also, you get an archive, you get access to the members website where there's an archive of historical trade room recordings. I record every day's trade room and I post it right up there on the members website. So you get access to those archived recordings. So here's the link again. You can see it here on the screen. I'll post it one more time into the chat window just so everybody gets it one more time. There's the link right there. You can see it. 10 bucks, you know, 10 bucks isn't very much, I'll tell you. With what I said earlier today, I had a trader today, like I said, tell me that they've had a 27% gain in their trading account during their trial time just over the past 2 weeks. So, you know, just think about that. That could be very significant. It easily could pay for the $10 trial for the 14-day pass that you would have there. So let me answer a couple of questions. Yes, the trade room is open Monday through Friday. I think I mentioned that a few minutes ago. 10 a.m. Eastern Time to 11:30 a.m. Eastern Time really will depend on the questions that I get. All right, I think I answered that for you, King and Ronald. Forex Traders Daily.com. I'll post that into the chat window too. It's Forex Traders Daily.com. That is into the chat window also, forextradersdaily.com. That's where I post my daily video. It's just a single heads-up video every day, and you get a chance to see that. And you can go there and see the CAD trade suggestion for the day today. George is asking, do you trade certain pairs or all of them? I personally concentrate on the 7 pairs that include the U.S. dollar. You know, I said it earlier on in the webinar today, there's dozens of currency pairs out there to choose from. I think of it kind of like my friends. You know, you got a lot of friends, don't you? But do you know every single detail about every friend? You know, if you got 200 friends on Facebook or whatever, do you know every single detail about their lives? No. But if you concentrate on a couple of friends, a couple of currency pairs, you get to know the ins and outs, their personality and their characteristics. So I tend to focus my efforts on the U.S. pairs only. What did I mean by a common indicator? From Al is asking, what do I mean by a common indicator? Aren't they all common, at least 90% of them? Well, you know, you'll come across an indicator every now and then that you've never heard of, or you don't see any training material about, or it's, you know, you ask somebody and say, oh, I've never heard of that indicator. But I guarantee you talk to somebody about Fibonacci, that's a trader, you say something about Fibonacci, you say something about support resistance, trend lines, moving averages. Yeah, everybody's going to know about those. But there's, you know, some obscure ones that not everybody uses, or at least some of them, they're very hard to understand, especially for a new trader. That's what I mean by that. And there's dozens. Remember that big long list? You know, there was about, what, 40, 50 indicators on the list. Not all 40 or 50 of them are common. I'll tell you that right now. Jack is asking, do I use harmonics, fractals, chaos? No, I don't. Basically, what you saw there in my presentation, maybe a few other things here and there, but most of all, that's majority of my strategy. You'll see that in the videos. If you, the free videos are free, the ones that are forextradersdaily.com, the daily videos. You'll see that on those videos that I have a very simplistic strategy that has worked out well for me. Thank you, Chris, for that there. The cost of the 14-day trial offer is $10 right there on the screen. You see it, $10 includes 14 days all access pass. So not much at all. You probably spent that on lunch today. Tim, as far as I know, it is available on a regular basis, but you just never know. Let's see. Tim's also asking, can the time be manipulated to get maximum usage out if you miss any days? Well, the trial is 14 days. That's the trial period, and then it will automatically renew at the going rate at the time. But you can cancel at any time. King is saying, may appear simple, but actually quite complex. Well, hopefully that I can simplify that for you on a daily basis. Brian, what are the trade room hours again, please? My trade room hours are 10 a.m. Eastern Time to 11:30 a.m. Eastern Time. Sometimes goes a little bit more. Went almost 2 hours a couple of days ago, depending on the discussion. Yeah, I know that that's after the U.S. Open, is close to the New York or the London close. And people ask me all the time, wouldn't it be better to be earlier or later, and can't you make it longer, and can't you do it 2 or 3 times a day? I'm only one person, truthfully, and I can't trade 24 hours a day. Do I actually take the trades myself? Absolutely. I'm a trader, and I trade everything that I'm talking about in the trade room. And I'm sitting just like the US CAD trade I was talking about a few minutes ago, sitting in some really nice profit right now on the US CAD trade myself. That is exactly the trade that I entered this morning. Yeah, well, if you can't be during the trade room, if you can't be there from 10 a.m. Eastern Time to 11:30 a.m. Eastern Time, that's okay, because I record the trade room. They're recorded every day. They're posted on the members' website. As you can see, I concentrate mostly on the midterm or longer-term compressions. So many of the trades that I suggest might even take a couple hours or longer to actually come around, the setup to actually be verified. So, you know, sometimes one of the trades I did recently, I set a pending trade there, and it took me into the trade while I was sleeping. So I don't think it's necessary for you to be there. Of course, you can get the live commentary and questions from the trade room if you are there. What are the primary chart timeframes that you use to trade from Jack there? Primary timeframes that I trade from are the daily and the 4-hour. I use the weekly also for some trend direction. You know, usually start with the weekly, back to the daily, the 4-hour. I usually don't go under the 4-hour chart. You know, I think that the 5, the 15, the 30, the 1 hour are too intraday noise and not really what the big money is doing. I'm looking for what the big money is doing, and I want to trade what the big money is doing, not the intraday noise. How about the range for the potential reward? Well, Al, just to answer that question, I use the same shaded colored type areas on my daily charts also, the ones I trade from, and I use the opposing area as the target. So if I trade a resistance zone, I'm trading down to the support zone, if that makes sense, if you remember from the pound-dollar explanation that I gave you. What is the usual trade holding period? That can vary and be unique from trade to trade. Sometimes I'm in a trade for just, you know, a few minutes. Sometimes it's a few hours. Sometimes it's a few days. It just is unique. I can't say that there's a usual. Sometimes your support and resistance zones are too close. Possible. I don't think they are usually. I think they're pretty far enough apart to make them make sense. Brian, can the trades be done with future contracts? You know, I have no idea. I have always only exclusively traded spot Forex, cash money. So I would assume so, but I can't say that for sure. King is asking, do you put higher priority on horizontal support and resistance over ascending, descending trend lines? Yes, I do. I would put a higher priority on support and resistance, but the diagonal, ascending and descending trend lines are good for determining directional purpose, directional trend. George is asking, do you adjust your trading activity based on news events and on Forex Factory? Yes, I do. I know when news events happen. I don't by any means call myself an economist and understand all the ins and outs of fundamental trading. I'd be the first one to tell you that. I'm not a fundamental trader. I'm a technical trader. But I do know when news happens, and I know that it can be a catalyst for change in the price. So I do know when news happens, and if it gets too close to news, I might stay out of a new trade event before news. But other than that, I'm not really worried about news. What about the 1 hour chart? That is noise for you. When I talk about noise, I'm just meaning a lot of volatility, a lot of chop, and a lot of up and down sometimes. And maybe not as much on the 1 hour, but when you especially get down 30-minute, 15 and 5-minute, I think that's not really what the big money's doing. I think that's just intraday choppiness and not what the major players in the market are doing. RX, is there going to be a recording of this webinar? I believe there will be, but I don't know how you're going to get it. I just don't know. What is the smallest profit target move you'll take? Again, Jack, that's going to be unique to every trade. I have had profit targets that have been 30 pips. Sometimes they're 70 or 80 pips, sometimes farther. It just is unique to where the support and resistance zones line up. Al, how do you decide your fibs start to say where lows near each other, or two unequal lows near each other? I go to the lowest low. When I'm drawing Fibonacci, I'll go to the lowest low and the highest high within the trend. But again, Fibonacci is a bit subjective to each artist and their vantage point, the zoom factor on their charts. So it's not going to be a pure science to drawing Fibonacci levels or support resistance or trend lines for that matter, but more of an art form. The more ranges that I draw with Fibonacci, when they start to overlap, tend to like that a little bit better. RX, do you give specific signals or just areas of support and resistance in your trading room from 10 to 11:30? Well, sometimes I will give you specific signals. Sometimes it's just the areas to watch. It really depends on the uniqueness of the market at the time. I'm not going to force a trade to happen during the trade room just to make it happen. I'm just not going to do that because I'm trading everything I tell you. I'm not going to force a trade to happen just because we want it to happen. I'm going to wait for the right signals to set up, the setups to occur. So sometimes I will tell you that if it makes it here, I'll be looking for a selling opportunity, but until it does that, I won't be getting in. I'll give you specifics about stop loss and potential entry point and potential target, but we may not actually enter it during the trade room, but at least I'll give you the setup for when it does. Do I ever look at volume? No, I do not particularly look at volume. What about the franc? My opinion, stay away from the franc. That's about as much as I can tell you, Mr. Lin. Fortunately for myself, I was not in any U.S. franc trades over the past few days, or any franc trades for that matter, including that include the Swiss franc. I did tell everybody yesterday in the trade room, don't buy the franc, but that was simply because it was into resistance. So hopefully everybody that was in the trade room didn't buy the franc. Let me give you the link one more time there. I'm going to post it into the chat window in case you missed it. There is the link for the 14-day trial, $10. You get all of this stuff and more. I think long-term that we're looking for the US CAD to go higher. That's really, but it's got to break through the barrier of resistance that it's at right now. I'm in the buy on the US CAD RX, so I really hope it just continues to go higher. I've locked in 20 pips and closed 50% of my position into the resistance it's at right now, but I really hope that it breaks the ceiling and continues up towards the 1.2200 level. No guarantees there, but that's what I'd like to see. All right, well, that was a fast, speedy move through all the questions that I see there. Again, I want to say thank you for allowing me to spend some time with you this afternoon. I really hope that I get a chance to see you in the live daily trade room at some point over the next 14 days. Please ask questions in the trade room. hopefully I can be a benefit and assistance and to help you become a profitable trader. I will say thank you and have a good day.